These pictures here show helicopters flying on the outskirts of Kiev.
Russia's full-scale invasion of Ukraine, the largest invasion of a neighboring country in Europe.
Leaders in Moscow say they are the aggrieved party.
A year has passed since the Russian forces rolled into Ukraine. The world has been witness to 365 days of bloodshed, suffering and atrocities. Analysts estimate that about 200,000 Russian troops have been killed or wounded in the war so far. By comparison, about 100,000 Ukrainians have been killed or wounded in action, and 30,000 civilians have died. The world economy also paid a hefty price for the war. According to a German study, it cost the world a whopping $1.3 trillion in 2022. Even now, the global economy is enduring the consequences with crunched supplies of grain, fertilizer, and energy, along with inflation and economic uncertainty. How has the war affected the global economy? Let's understand. By February 2022, global trade was approaching pre-COVID levels, but the Russia-Ukraine war rattled the global system of trade. The war caused major disruptions in export of wheat from Russia and Ukraine. Since both the countries accounted for about a fourth of the global wheat exports, besides other agricultural goods, food prices rose across the world. Imports of goods from Ukraine have taken a massive hit and declined by 91%. In fact, the import of some principal items such as fertilizers, inorganic chemicals, ores, slag, and ash have completely stopped. But the world is gradually reviving. The Food and Agriculture Organization Food Price Index climbed to its highest level on record, but has now settled at levels seen before the conflict began. Energy prices have also cooled, amid a slew of Western sanctions on Russian oil and a reduction in the European Union's imports of Russian hydrocarbons. Brent crude prices had spiked to as high as $133 per barrel in March 2022. It is currently around $81. The price of natural gas has moved likewise and is around half of what it was a year ago. Russia has found a large market for its oil in India and has displaced India's traditional suppliers. The equity markets have shrugged off much of the initial decline as the focus shifted to other triggers. European and Indian stocks are both higher now than when the conflict began. There are no real signs of a way out of the conflict. However, the global economic recovery has proven to be more resilient than anticipated. Despite the initial shockwaves, the world economy has managed to bounce back, thanks in part to swift and decisive action of central banks and governments around the world. It is important to note, however, that recovery has not been uniform, with some sectors and countries continuing to face significant difficulties.